position. If you have a financial position, statement of financial position of the parent company, and then you have statement of financial position of the subsidiary, how do you condense them? How do you put them together to form what we call a group statement of financial position? That is a major agenda. Once we understand that concept here, by the end of the session, ladies and gentlemen, I'll be so happy. I'll count myself having achieved so many things today, so many things today. So great. And I would want us to use this easy question here. This easy question here. I'm reading here. Ladies and gentlemen, we are told on 1st April 2018, Pedantic acquired 60% of the equity share capital or Sophistic in a share exchange of 2 shares in Pedantic for 3 shares in Sophistic. The issue of shares has not yet been recorded by Pedantic. At the date of acquisition, shares in Pedantic had a market value of 6 each. Below are the summarized draft financial statements of both companies. I'm not interested in the statement of profit or loss. These I'm not interested. I am interested in today's class. I'm interested in showing you guys how to get the statement of financial position as at 31st September 08. So they have given us here for the Pedantic and for Sophistic. My role today is to show you how to consolidate. And the consolidation is an easy thing. To consolidate, ladies and gentlemen, is the easiest branch of accounting that we have, or financial reporting that we have. It's all about adding like terms, line by line, like terms of subsidiaries and parent company. Very easy thing. So ladies and gentlemen, what do they want us to do here? What they want us to do here is something very simple. They want us in part B to prepare the consolidated statement of financial position for Pedantic as at this date. The consolidated or group statement of financial position. Great. Let me go through the charts here. Yes, great. Ladies and gentlemen, remember, as usual, any group question, you must always start with what we call the group who. You must always start with what we call the group structure. And this is how our group has been structured. We have one company called Pedantic, which has gone ahead in this case, ladies and gentlemen, to acquire some 60% shares of another company called who? Called Sophistic. Another company called Sophistic. So ladies and gentlemen, listen and listen to me very well. What do you think of this 60%? Is 60% a small shareholding? 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 It's material. Actually, the moment, ladies and gentlemen, you own more than 50% of a company, that signifies what here? Control, major. It means you're controlling this. This is your child. So it means, ladies and gentlemen, that this being more than 50%, it means that there is what we call control. And the companies that you control are technically known as who? Companies that we control are technically known as who, ladies and gentlemen? Companies that we control are technically known as who in the group? Are they associates? Companies that we control, I'm asking you a question. What are they? They are subsidiaries. Thank you very much, Bahar. So it means that if there is control, then the company that is being controlled will be called a subsidiary, whereas the controller here will be called a parent company, will be called a parent company. Will be called a parent company. Now listen and listen to me very well. So ladies and gentlemen, we can see that the parent owns what here? 60%. There must be someone else who owns the other percentage, the smaller percentage. This someone else who owns the smaller percentage, who has got this, we normally give them a special term. Is anybody who is able to remember that special term given to this party? Who will not be having a say in the board, right? You can type there. It's NCI. It's non-controlling interest. Please write that in full. Non-controlling interest. It's NCI. Thank you so much. It's non-controlling. So the non-controlling interest here has got 40%. Has got 40%. So the students who are with me in my last class had begun this question, but I have to begin it from the beginning because now I'm consolidating financial statements Which financial statements? Statement of financial position. So I have to start from the beginning. So no worries. At the end of the day, you'll be happy. So the parent company has 60%, non-controlling interest has got 40%. So first of all, up to here, are we together? Are we together up to here? Are we together up to here? Are we together up to here? Yes, thank you very much, Agi. Thank you very much. Now, the thing that you would want to tell us is as regards the date of acquisition and the date of financial reporting. The date of acquisition and the date of financial reporting. Please write this in full, given for those that, especially that I'm teaching for the very first time, teaching them consolidation, you must write this in full. This is date of acquisition, date of acquisition. This is date of financial statement. So they told us something very interesting here, that we acquired this subsidiary on which date? On which date? On which date? On which date? The date, ladies and gentlemen, we acquired this subsidiary, ilikuwa tarehe ngapi? Ilikuwa tarehe, it was 1st April 08. It was 1st April 08. This is 1st April 08. 1st April 08. How about the financial statements given? The financial statements given, which day are they dated? The date of the look at the statement of 30th September 08. 30th September 08. 30th September 08. So could you kindly count for me and tell me how many months did we stay with this subsidiary in the financial year? How many months did we stay with this subsidiary in the financial year? How many months? Somebody talk to me tonight. Jackie. Hey, Jackie, you're the first lady who has gotten these months correctly. Many ladies don't know how to count these dates. This must be very special. So we have April, May, June, July, August, and then the whole of September, 6 months. Thank you so much. That is the end of my group structure. That is the end of my group structure. If you get your group structure wrongly, then you will get a 0. Once you finish the group structure, now you should never be cheated by anybody. You start opening some workings. No. Once you finish, ladies and gentlemen, once you finish this group structure concept, straight away go to what the examiner has asked you to do. What has this examiner asked you to do? This examiner in Roman 2 of the question whose agenda we are on top of today has asked us, ladies and gentlemen, to do something very simple. Has asked us, ladies and gentlemen, to give them, you start with the name of the company. The name of the parent company is Pedantic. So we call this one here Pedantic Group. So the group will always be called by the name of the parent. The parent here is called a Pedantic. So you're talking of Pedantic Group. So Pedantic Group, consolidated statement of financial position. Consolidated statement of financial position as earth. The date has been given there as 30th September 08. And then you underline nicely. You underline nicely. So remember how then we start displaying, structuring our statement of financial positions. It is assets vis-a-vis how those assets have been financed. We start with assets, and then we look at equity and what here? Liabilities. So we start with assets. Here. So we mention their assets. So assets, mention their assets. Remember, you are taking everything the way it has been given in the question paper. Everything the way it has been given in the question paper. It is statement of financial position that we are consolidating. So we start with non-current assets. So non-current assets, what do we have? Non-current assets. We have, ladies and gentlemen, the first one there is property, plant, and equipment. Property, plant, and equipment. And the non-current assets, ladies and gentlemen, and the non-current assets, even if I'm not told, if I have subsidiaries and the non-current assets, even if I'm not told, so long as I've got subsidiaries, of course, I must create some provision of goodwill, provision of goodwill for my subsidiaries. So even if you're not told, anytime you've got subsidiaries, you must, as a non-current asset, you must come and give us your goodwill. Goodwill of who? Goodwill of subs. You don't write in full goodwill of subs like that. Great. So, ladies and gentlemen, the moment I do that, I'm just trying to copy the general structure. I can see the next thing they want me to capture here is called the current who? The current assets. So current assets are come under the line. Under current assets, I'm looking at things like inventory. I'm looking at cash. I'm looking at those things, I know you know them better than myself, but remember here, I'm reading everything as it has been structured by the examiner. So like this examiner, even simplified the work for me. He came and put all the current assets as lump sum. So I'll simply come and mention their current assets, just like that. Great. So I'll come and just write here for the sake of it. I will come and say current who? Current assets, like that. Great. And then, of course, I'll leave some space. You must keep on leaving space, remember. Some space here for total who? Total assets. So that's like one part of the balance sheet, one part of the statement of financial position. So from there, now we'll go to the financed by. How do we finance this? It is equity, and who? Liabilities. It is equity versus liabilities, of which we begin with equities, remember. Equities, we have share capital. You don't guess, remember. You are picking everything the way it has been given to us by the examiner. So we have the share capital. So we have the share capital here under equity. We have share capital there. I can see retained earnings. I can see retained earnings. I can see retained earnings. I can see retained earnings, retained earnings, retained earnings. What else in this case here do you know? When we are consolidating under equity, what else do you think must we add here when we are consolidating? What else? We must have, even if it's not given there, what else must we, just like we included goodwill here, we must include something here. NCI, thank you very much. So you must come and include this other permanent source of capital, which is called non-controlling interest. Remember these guys, they have our shares, ordinary shares. We don't owe them. We shall never pay them. Whenever anyone wants, in this case here, to walk away from our company, they have to go to the stock exchange, secondary market, and get a person to buy their share. So the company will never, this is a permanent source of finance. It's an equity capital for us. It's an equity capital for us. So remember, you should leave some spaces in between because of things like share premium, which may crop in later on. Thank you very much. So after equity and liabilities, now you move on to the next thing here. The next thing, ladies and gentlemen, that these guys have, we have here retained earnings. Retained earnings, already I have that. So now I shall be able to go to the non-current liabilities, non-current liabilities, non-current liabilities. So we have the non-current liabilities. The only non-current liability that I can see there is called the 10% loan notes. The 10% loan notes. The 10% loan notes, 10% loan notes. From there, I'll be able to walk to current liabilities, current liabilities. So from there, we have the current liabilities, current liabilities. So current liabilities, fortunately, it's only one. Great. Don't have to duplicate this. And just leave it like that, current liabilities. So first of all, I would want to know whether you guys have been able to copy this thing all the way up to where I am. Have you been able to do that? Have you been able to do that? Right? Today, I'm not seeing any man talking to me. I don't know why. I'm not seeing any man talking to me. Seems that these guys have gone on strike. Thank you very much, David. Thank you very much. At least now I feel happy. Now I feel happy. Thank you very much. Thank you very much, Agi. Yes. Sasa nataka unisikize na unisikize makini sana. Kama kuna question unataka upate 100%. Kama kuna question unatakiwa kupata 100% ni group consolidation. Ukienda kwa exam upate group consolidation huwezi pata marks more than a half, then know that you have a problem. But fortunately that problem does not require any medical intervention, right? Group consol, wachana hizo zingine, I should take the PPE of the parent plus the PPE of the subsidiary. Just that. Don't read notes first. Don't read any notes first. Wewe kuja tu hapa kawaida, unaangalia hapa. So we have property, plant and equipment. So we have 4,600 and 12,600. We're only adding. So we have here 4,600 plus 12,600. Thank you so much. Great. So goodwill of subsidiary, this one I will need a working. Goodwill for subsidiary, that one I will need a working later on. I'll need a working later on. From there, please jump and go to the current assets and don't pick your calculator yet. Don't pick your calculator yet. So go to current assets, you are consolidating, putting figures of the parent, plus figures of what year, plus figures of who, the subsidiary. The question, I like this student quite a lot. People who are positive. Yani ameingia kwa WhatsApp saizi, akapatana kuna class na akaingia na anacheka. That's the attitude really. That is the attitude really. Great. So ladies and gentlemen, here we are. So for current assets, what do? I'll take 16 plus 6,600. 16,000 plus 6,600. So 16,000 plus 6,600. Don't add anything. Don't take your calculator and then you start giving us figures, because later on, I'll be doing adjustments. Total assets wachana nayo. Enda kwa share capital. What do you know about share capital? Hey, you great students of mine. What do you know about share capital as regards group consolidation? As regards group consolidation, what do you know about share capital? As regards group consolidation, what do you know about parent only? Great. Parent only. So parent only. Group consolidation share capital is parent only. And the parent only, ladies and gentlemen, in this question, in parent peke, I like that, Steve. And I hope, Steve, now you have recovered fully. You're a young man, you shouldn't be sick. You shouldn't become sick. So parent only, ladies and gentlemen, parent only share capital. You know, there is a figure of 10,000 of the parent called pedantic, and then we have 4,000 called for the share capital. We always pick the one of the parent only. The one of the parent only. So parent only, what do we have here? Tumesema ni 10,000 like that. Like hivyo tu. Retained earnings, the same case. Retained earnings, you pick the one of the parent only. So retained earnings also the same. Although we shall be doing some adjustments later for retained earnings, but also for the retained earnings, we always pick the one of the parent only. So retained earnings, I can see 35,400. I can see 35,400. I can see 35,400, 35,400, 35,400. Non-controlling interest I would need a working. However, this non-controlling interest is a straightforward one. Even this one is a very straightforward one. Because what I need is a non-controlling interest as at the date of acquisition. The non-controlling interest as at the door, the date of acquisition. And NCI basically will be given at the very last year. NCI, this is the NCI figure. Hapa, utaambiwa hii ya mwisho kabisa. Pedantic has a policy of accounting for any NCI at full fair value. The fair value of NCI interest in sophistic at the date of acquisition was estimated to be 5,900. So what I'll do with this NCI and controlling interest, I'll simply write the non-controlling interest value at the date of acquisition, and then I'll add the share of PERP. I'll add the share of post-acquisition profit later. I'll add the share of post-acquisition profit later. And then we go to the non-current liabilities, where I'll pick the 10% loan notes. So 10% loan notes, what do we have here for 10% loan notes? For 10% loan notes, I'm picking 3,000. plus 4,000. 3,000 plus 4,000. So loan notes here, we have 3,000 plus 4,000, like that. And then we have the current liabilities. We are consolidating, putting together things like how we are together in this room as a family. We are already consolidated. And of course, are happy to be here. We are happy to be here. So for the current liabilities, it's 8,200 plus 4,700. 8,200 plus 4,700. So 8,200 plus 4,700. I'm so sure, ladies and gentlemen, there must be somebody here who has not understood anything. And really, we haven't even begun doing the question. We're just copying. So feedback, I would want to know whether we are together, ladies and gentlemen, up to here. Is there somebody who has been able to copy like myself there? Great, 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 great. Mary Achoki, thank you very much. 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 Now, so ladies and gentlemen, nikifika hapa sasa mimi nitapata marks zote. Hii nitapata marks zote 100%. Kwanza naipigia hesabu yake nitaianzia wapi? Hesabu yake nitaianzia wapi? Twende kwa notes sasa. Twende kwa notes sasa. Twende kwa notes. Hapa sasa mimi nimeshaichorea. Nimeshaichorea sasa. Twende kwa notes hapa. Kwa notes, note number 1, we are picking only things that will affect our statement of financial position. Things that will only affect our balance sheet. We are told note number 1, at the date of acquisition, the fair values of sophistic assets were equal to their carrying amount, with the exception of an item of plant, which had a fair value of 2,000 in excess of its carrying amount. Yes, I'm speaking of thousand, not millions. Why? Because my figures up here are captured in terms of what? Thousands. So all my pronunciations will be in terms of thousands. I must be chopping the 3 zeros at the end there. So 2 million will be 2,000. 2 million will be 2,000. So you're told, I'm repeating again, that at the date of acquisition, the fair values of sophistic assets were equal to their carrying amount, with the exception of an item of plant, which had a fair value of 2,000 in excess of its carrying amount. That's revaluation. That's revaluation. When I'm acquiring a subsidiary, I must call in a valuer who will be able to look at the figures that we have in our books, what we call the carrying values, and compare the assets that we have, the fair values of the assets we have with the carrying. So at times we'll be having an asset. This is motor vehicle. I'll be depreciating it. So in my book, I have it at 10,000. But you see now this expert will come and tell you, ladies and gentlemen, that, hey, if you take this car to the market today, you'll be able to get 12. So it means that I must increase my books. I must, in this case, inflate my books to reflect the true value of the assets, the market value. So in this case here, I need to, like here, I can see a revaluation upward. It's a revaluation upward. So this is a revaluation. Like here, we can see that the fair value is higher. When the fair value is higher than the book value, it means that we need to boost our PPE. We are told here, let me repeat this very well. We are told, ladies and gentlemen, here, that at the date of acquisition, the fair value of sophistic, fair value is the same as market value. The fair value of sophistic assets were equal to their carrying amount, with the exception of an item of plant, which had a fair value of 2,000 in excess. So it's a revaluation upward. And because this is a revaluation upward, we've said we shall boost our property, plant, and equipment. Boosting means you come and add. So come here, and then you say, what is somebody? Plus 2,000. This figure is being brought in at the balance sheet now. It means that it has not been depreciated. So once I have a revaluation, I must always compute what we call depreciation on revaluation. So come and give us depreciation on revaluation. Give us depreciation on revaluation. Please, working zako. Yuko mwingine anapenda copy mwalimu sana. Utapata sababu mwingine na copy kama mimi. Mimi niko na board ambayo na rab. Wewe sasa yako unaandika huku chini. Right? So depreciation on revaluation, allow me to check some comments here, please. Feel free in this case here to do what here? Yeah, to ask questions here, So depreciation on revaluation. So depreciation on revaluation, what do we have? We shall take the revaluation amount. We take the revaluation amount all over the remaining useful life. Revaluation amount all over the rule, the remaining useful life. Please andika in full. Mimi napenda sana hivi tu ya hii. Revaluation amount all over the remaining useful life. Umeandika namna hiyo kweli? Revaluation over remaining useful life. The revaluation here is 2,000 divided by the remaining useful life, which the examiner will always tell you. Like here, they told us it had a remaining life of 5 years. Inakuja ngapi? 2,000 divided by 5 inakuja ngapi? Wanasema ni 400. Agidan kan 400. But this 400 is for which period? The 400 is for which period? How many months? How many years? This 400. It's for a whole year. For when you divide with the number of years, whatever you get, it will be depreciation per annum. But don't forget that this asset belongs to the subsidiary, and the subsidiary, we stayed with it for only 6 months. And the depreciation normally accrues with the time. So I must come and time apportion this to get the true depreciation figure that we should charge, which is 200. So what do you know about depreciation? You will come and do what here? You will come and subtract. Depreciation is loss in value. Now, as I wait for you guys to catch up with me, because I know I'm a very fast man, as I wait for you to catch up with me, could you kindly tell me, this is a figure of the subsidiary. Why was I not taking these figures here times 6/12, like we did with the statement of profit and loss? Why was I not multiplying the balance sheet parameters of the subsidiary with 6/12? Why was I not apportioning them, those figures? Thank you very much, Okewa. Reporting here is at the last date. Balance sheet is at that date, is at this date. Balance sheet does not accrue for a whole year. The last date of the financial year. Whatever assets that we have there, all of them belong to the group. So we don't time apportion. Great. Thank you so much. So, ladies and gentlemen, there I am. Now I will go to, with your permission, I will go to note number 2. Sales from sophistic to pedantic in the post-acquisition period were 8,000. This is what we call fake sales. There is no way you can claim that you selling goods to your family member, close family member. This is a fake sale, which we were able to subtract from our income statement metrics. Very nice. I'm not interested really with that. But I'm interested now with the statement that follows thereafter. We are told the sophistic made a markup on cost of 40%. In group consolidation, when I see the word markup, I should know that markup is an enemy of progress. Markup is an enemy of who? Of progress. Markup is an enemy of progress. Markup is an enemy of progress. Whenever I see markup, I can see some low-hanging fruit. This examiner will be able to give me some mark there. Whenever I see markup, I must change this to margin. So markup is 40/100. So when markup is 40/100, could you kindly give me the value of margin? So let me try to simplify this for you. Will the margin be 40/60 or 40/140? Which one has got a bigger denominator? Which one has got a bigger base? Which one has got a bigger base? Margin, yes. Margin has got a bigger base. Thank you very much. Margin has got a bigger base. So if it has got a bigger base, then what I'll do, first of all, I'll come and copy 40/100 there. And then I bring the numerator to increase its base. I bring the numerator here, I say plus 40 here, plus 40 there. Kwa hivyo itakuwa 40 over 140. One day I remember mwanadada fulani alinishangaza. Tukasema markup is 20 over 100. Nikamuuliza sasa mwanadada, margin itakuwa ngapi? Akaniambia ni 20 over 101. Nikajaribu kuimagine ametoa 101 wapi? 101 nikafikiria, nikajua mwanafunzi maybe maswali ambayo alikuwa anafanya yote huko nyuma, hapa juu ilikuwa ni 1. Sasa akafikiria hapa chini kuongeza 1 throughout ni kama ni formula. No, angalia Faith ameshapotea. Angalia Faith na Faith tumesema namna gani saa hizi Faith? Tumesema always margin has got a bigger base. There is no way you can subtract Faith. Could you kindly revoke that answer, Faith? It will be 20 over 100. 20 over 100, but because margin has got a bigger base, nitaongeza pale kuwe 20 over 120. Thank you very much. So hapo ni mark ya bure. Abracadabra, mark ya bure. This examiner gave me the markup. I've been able to change it to margin. Thank you very much, iPhone person. Thank you very much. But now, up to there. Are we together? Up to there. Are we together? Those yeses are nice, but they are very few. Out of 76 participants, I expected to get yes. 70 of them. Thank you very much. Now, tuendelee kusoma sasa woye. Thank you so much. Tuendelee kusoma sasa woye. So tukiendelea kusoma, tunaambiwa hapa sasa. Sophistic now has a margin of 40 over 140. Pedantic had sold 5,200 of these goods by 30th September. Ladies and gentlemen, that's a very good language. This examiner wants me to come and calculate what we call unrealized profit on stock. Is there anybody who can remind us the formula of getting unrealized profit on stock? Is there any examiner? I'm calling you people examiners. For sure that now is a profess that all of us will pass. So UPS equals to who? UPS. Thank you very much, Nimrod. Nimrod amemaliza, amesema hii ni profit margin times, in this case here, REES, where REES is the remaining intra-sales. REES is the remaining intra-sales. Please write that in full. UPS is the unrealized profit on stock. Unrealized profit on stock. Annette, thank you very much. Unrealized profit on stock. Unrealized profit on stock is profit margin times remaining intra-sales times remaining intra-sales. So you guys have told me that the profit margin is 40 over 1. If you wish, you can cancel this, but is there a need really? It's 40 over 140 times remaining REES. We had sold the goods worth 8,000 between ourselves, and by the end of the year, we were able to push the market 5,200 worth of those goods. So the remaining intra-sale will be 8,000 minus 5,200. Whatever you guys get there, I don't want to know the figure. What I'm interested in is the UPS. Is there anybody who is able to give me the UPS tonight? So Nimrod tells me it is 800. UPS you don't do. You'll get some students telling me, Mwalimu, times 6 over 12. Is your depreciation. Hii hakuna kutime a portion. Andika mahali namna hiyo kwa Kiluya. Andika kwa Kiluya mahali. The only Luya word I know ni tawe. Sijui jina imetokea wapi na shika. I don't know. Andika mahali hapo kwamba UPS is never time apportioned. It's never time apportioned. Don't ever apportion UPS. And once we have gotten this UPS, could you kindly tell me the accounting treatment? Having gotten the UPS, could you kindly tell me the accounting treatment? in the group statement of financial position, how should I treat UPS? Less it from inventory, I like that. Less it from inventory, I like that. Because basically what this means is that our inventory is overstated with that profit. Remember, it is wrong of us to maintain stocks with a profit inside. So less from inventory. But now when I move around, turn around like this, I can't see inventory here. I can't see inventory here. So in an exam, what should I do? Cry? Should I cry? I can't see inventory. Thank you very much, Agi. Thank you very much, Jackie. But mwalimu, inventory is found in current assets. So come and say minus what here? Minus 800. Say minus 800. Thank you so much. Minus 800. Minus 800. Inventory is under current. Thank you very much. Cry, then adjust. Cry, then adjust. What I'll do, I'll, like this. And then now I'll be sad a little bit, and then I move there like that. Yes. So I've been able to adjust these current assets. Thank you so much. So are we together up to this? Sorry for asking you that question for many times. Are we together up to there? Great. I've never seen some students here really talking to me. I've never seen Emily M talking to me. Diana Beryl, I've never heard from you. Brian Nadit, I've never heard from you. Bahar, I've heard from Annette, Agi. Great. Ruto, thank you very much. At least you are. We have this student called Moi, aniongelesha Moi. Kila mwanafunzi lazima aongelesha babake, mwalimu wake. Lazima. Tuniangalie majina zenu. Hamisi hujaniongelesha. Ingosi Robert hujaniongelesha. Ingosi Robert, my friend, Ingosi Robert. Hujaniongelesha kwa nini? Aha. John Mweresa. This must be a man from Nyamira. Hujaniongelesha. Hata Malusi Lucy, mimi siwaoni ya Malusi Lucy. Hata Mary, Mary is my mother's name. Mimi siwaoni kabisa. Mjua wengi wananiulizanga baadaye, mwalimu, how do I pass this paper? Passing this paper in Zoom is how aggressive you are. How fast are you giving us answers? Right? If you're not able to get things, tell mwalimu you cannot continue. I have to understand. Right? Thank you very much. Now we go to the next thing. Following, thank you very much. Brian Ditt. Hii majina mko nayo ni mzuri kusema ukweli. Majina mko nayo. Hii inafaa Kasneb wapatie tu passes. Now we go to the next question here. 3. Other than where indicated, profit or loss items are deemed to accrue evenly on a time basis. They're putting that there to simply become verbose, to confuse the easily confusable students. So meaning that Roman 3 is a useless sentence. I can do without it. Nothing really for me there. Number 4, sophistic trade receivables at 30th September 08 include 600 due from pedantic. Ladies and gentlemen, I always keep on giving you a very good example here. Please never forget, within the family, we have a husband, we have wife. So if, for example, this morning, my wife asked me for 100,000 shillings. Akaniambia mwalimu nipatie 100, anaita mwalimu sababu alikuwa mwanafunzi wangu pia. Mwalimu nipatie 100,000 shillings. Nikishampatia jameni, do you think I'll ever recover that money from this great lady? Will I ever recover this money from this great lady? Never. You unasahau. So any internal owings within the group, they are fake. Internal owings within the group, they are fake. So I need to go, ladies and gentlemen, then to the receivables. The receivables that I took to my group, the receivables, you see, sophistic trade receivables include 600,000 from the father. So please go to the receivables and strike off that 600. So where do I find receivables here? Where do I find receivables here? Right? Current assets. So for current assets, and pale sema minus 600. Tunaenda vizuri sana. Sema hapo -6, alafu endelea kusoma sentence. Ukiendelea kusoma sentence, what else are we told? Ukiendelea kusoma sentence, ladies and gentlemen, we are told here, due from pedantic, which did not agree with the pedantic's corresponding trade payable. This was due to cash in transit. Mina penanga cash in transit, the CIT in group consolidation. That one is the best free mark that is ever available. Cash in transit, ishalipwa na one company. So one company may release your pesa, lakini haijafika kwa ile company. Lakini macho ya group inaiona. So ikishaiona hiyo macho ya group, ikishaona hiyo CIT, cash in transit. Nitakuja niweke wapi hapa kwa group sasa? Macho ya group ni kubwa sana. Niweke wapi hiyo cash in transit? Niweke wapi cash in transit? Yeah. Either we introduce hapa cash CIT row, ama ukuje useme hapa cash in transit kwa current assets, useme plus ngapi? Useme plus 200. Yes, useme plus 200. 200 kama ni mimi wewe, I'm trying to demonstrate to the examiner broad and deep understanding of the subject. Nakuja naeka hivyo, hapo juu namwandikia CIT. Kumbuka maisha ni kustuana. Unastua examiner. Ama kasine baba nastuka. Kasine bina stuka kweli. Kasine baba. Haitingiziki we shall overcome. So this is cash in transit. One company had released the money, right? Haitishiki kabisa This time round lazima itatingizika. I've passed already. You will pass, trust you me. Plus 200 like that. Thank you so much. Now, ladies and gentlemen, listen and listen to me very well. Tuendelee kusoma hii statement. Due from pedantic, which did not agree with pedantic's corresponding trade payable. This was due to cash in transit of 200 from pedantic to sophistic. Isikizeni, hizi kampuni mbili ziko na internal owings, intra owings. Tuko na sophistic receivable 600. Tuko na pedantic payable 600, but remember they are there released 200 as cash in transit. Aka release, aka adjust book zake. Lakini huyu yako adjust book zake sababu hakuwa amepata hiyo pesa. Kumaanisha pedantic's payable inafaa kusoma ngapi in their books? Pedantic's payable inafaa kusoma ngapi in their books? Oh yeah, abracadabra. Pedantic, kumbuka initially the internal owings ilikuwa the same. Lakini pedantic imesha release 200. So wakabaki na 400. So then in their books of accounts they are saying, oh yeah, we have a payable to our son of 400. This is a fake payable. It's a fake payable. So this fake payable, where do we deduct this fake payable of 400 from? Where should I deduct the fake payable of 400 from? Where should I deduct the 400 fake payable? The fake payable, where should I deduct it from? The fake payable, where should I deduct from? Current liabilities, right? So from current liabilities, ukuja useme hapo minus 400. Alafu unajua ukiwa mwanafunzi mwerevu, for purpose of balancing, you see minus 600 plus 200. Somebody, what is minus 600 plus 200? What is minus 600 plus 200? What is minus 600 plus 200? It's minus 400, which matches this. For balancing purposes, sasa hapo tuko sawa. So turudi hapa, tusome hii ni nini. Sasa siku moja, mwanafunzi akaniambia, mwalimu, unajua nini? Wewe, ukipatia bibi 100,000, hiyo ni write off on your side. Lakini nao bibi akikupatia 100,000, ati hiyo lazima urudishe. And in most cases lazima irudi na interest. Is that really fair for the boy child? Ati ya bibi lazima irudi. Anakuambia ni ya chama. Ati hiyo lazima irudi. Hiyo ina amekopa kwa No. All ladies that we have in this case here, ladies and gentlemen, all ladies that we have in this house who happens to have given their husbands any money, please, tonight, go and tell that great husband of yours that money imekuwa waived, courtesy of Mwalimu Aura, tonight. Na mwambie ukweli, confess hata ikuwa ya chama, hiyo pesa nimekuachia yote. Hiyo nimekuachia yote, hata wewe burudika, usikuwe na wasiwasi, nitakuomba hiyo pesa tena. Please promise. You don't want to give waivers. You people. Why? Now come here. We are told here Pedantic has a policy of accounting for any non-controlling interest at full fair value. Na ladies and gentlemen, itakuja baadaye. Sasa nimebaki na working moja tu ambayo ni serious. Stella. Working moja tu ambayo ni serious. Na hiyo working sasa nataka utege masikio, hata sijui niandike wapi ndio uweze kuunderstand vizuri. Hapa ni pazuri. Hii working ni ya maana sana. Hii working ukishashika hii working, kusema ukweli. No, kabla ya working, because I would want to create some space. Hebu nipatie hizi answers. Sababu sina nipatie hizi answers. So kama PPE ni ngapi? PPE Jackie anasema ni 55,000. Haya. Current assets. Nani akona figure ya current assets? Oye. Loan notes. 10%